If you guys have not heard yet, in this week's news of the absolutely absurd in the meme stock world, Mullen Automative just dropped a proxy statement announcing their 7th reverse split. That'll be the 3rd one this year alone. And this one with a ratio of up to 1 to 250 shares. I want to hear your comments below, but also in this video, I just want to take a minute to show you a couple things to look at as you're analyzing these companies years in the past so that you don't get absolutely destroyed by a company that needs to raise cash through selling shares into the secondary market over and over, diluting the shareholders and having to do this many reverse splits over and over and over. People get attracted and stuck in plays like Mullen because you have social media promoters and even investors out there that repeat what they hear on social media, telling you over and over that there's billions of naked shorts and a cabal that is evilly manipulating the price of this company. Maybe there is, maybe there's not. The point is that the finances of the company are an absolute train wreck. The company has no income and they are blowing mind-numbing amounts of cash on expenses every quarter. And so they need to keep raising money. If you want to stand in front of that oncoming train because somebody you've never seen their face of on social media is telling you that there's billions of naked shorts, then knock yourself out. Do as you wish. But I'm going to speak to the more cautious or wise of you out there that want to learn how to read financial statements and risk factors in 10Ks, how you can see around that fog of the social media promotion. Why is it being promoted? Because the company needs money, or there are people who have built their entire grift around pushing the naked short theory. Maybe it's true, like I said, maybe it's not. But if you ignore the financials, you're going to get steamrolled either way. Just to recap a couple of things about reverse splits in general. I know many of you are already painfully experts at this, but reverse split does not change the math of any of your position, but you must know the intent behind that reverse split. And if the intent is to dilute to raise money, and the companies will always tell you this, that they need to raise cash, then that is what is going to destroy you. And going back to when the APE AMC reverse split conversion happened, that is why I exited my position once the reverse split conversion was approved, because as we had been talking since August of 2022, the company was going to dilute, and dilution drives the price down. How do you know if they need to raise money? Well, they're going to tell you in the 10Q, in a 10K, in the risk factors, and you can also look at the financial statements. What is the cash position of the company on the balance sheet versus their operating loss on the cash flow statement, or their net income loss over on the income statement? If the company's got $1 million in cash and they're burning $50 million a quarter or $50 million a year on the income statement or an operating cash flow, you know they're going to need to raise cash, and they will always clearly tell you that in the 10Q, in a 10K, in the risk factors. And I don't care how many people tell you do not read those risk factors, don't worry about them, they're just there to scare you. I'm telling you, you need to read those risk factors. It's not comfortable reading because it's going to set your world topsy-turvy from what you're being told on social media. But if you want to be an intelligent investor and not get wrecked by 7 reverse splits in a row, you must read those risk factors. That is the company telling you what is likely to happen. What would need to change with Mullen to fix things? They would need to sell tens of thousands, hundreds of thousands of vehicles and get some meaningful income coming in. That is not happening. So they're going to keep tapping that secondary market, raising money through equity shares as long as people are willing to give them money, and they're still out there. I've been talking to a bunch of them this week out on Twitter that still believe in the company. Why? I don't know. All you got to do is look at the financial statements and you can tell where this thing is headed. You can look at the revenue on the very top of the income statement, and it is painfully clear that this company has no meaningful revenue, especially when they're losing 10, 20, 30, $50 million a quarter. You cannot survive with this type of cash burn rate. And, it's not illegal to do reverse splits. It's not illegal to raise money by selling shares through dilution. NASDAQ has supposedly some rules on the number of times that you can reverse split, but they don't seem particularly interested in enforcing it right now. With Mullen, I don't know what's going on with that. If you got that figured out, let me know. But when these companies have no income and they are burning through cash, at some point, this thing will reach a terminal end and it will result in bankruptcy, either Chapter 11 or Chapter 7. Now, I know some of you like to play these stocks after a reverse split because the float collapses. In fact, some of you think Mullen only has 2 million or so shares out there because that's what the brokers are telling you that the share count was after the reverse split on April 11th. But if you read in the proxy statement from this week, Mullen's already diluted the float times 5 since April 11th, earlier this month. And there are now over almost 11 million shares of common stock out there. And that is straight here on this document from the company to you, giving you the current share count. The broker websites and the data consolidators out there that are telling you that the share count out there is only 2 million shares just cannot keep up with the fact that Mullen has been selling millions of shares into the market every day. And that is partially, mainly, largely what is causing the price to plummet. So if you want to listen to those people telling you to play Mullen's gonna moon because it only has 1 million shares or 2 million shares, keep in the back of your mind that the company is diluting so that they can increase the price and sell more shares. They are desperate for cash, and you're playing with fire if you want to try and take that trade. So I'm not telling you whether you should do it or not do it, but if you do it, limit your risk. Be intelligent about it. Let me know your thoughts down below. What do you think about this craziness of 7 reverse splits and ongoing dilution? I think if you had invested about $2 billion in Mullen in 2021, you'd have about 38 cents right now, if I did that math correctly. Let me know what you think down in the comments. Thank you for watching. I am Tony Denaro, and I will see you on the next video.